Well, good morning from Europe. Hope you're doing great whenever you are. This hour on today's March 19, Thursday, we'll be with you with the short market update. We will check what's going on in the financial market, what's happened in the past 24 hours, and how these changes can affect the markets. Actually, it was very, very important day, past 24 hours. We had three central banks meetings past 24 hours. And in next 24 hours or so, we're going to have four central banks meetings. Will be very, very important to watch them. This is while the geopolitical tensions reaching its highest level. We had tensions increasing in the Middle East, especially in Iran. Last night, Israel attacked two Iranian oil facilities in the South Pars, in the south of Iran, in the Persian Gulf. And in reaction, Iranian also attacked the oil gas facilities in Qatar, and that increased the energy prices, especially the gas and oil prices last night. And this increased the geopolitical tensions. Somehow, that what I think that after that, the President Trump asked the Europeans to support and help them to control the Strait of Hormuz, and they didn't react to these actions, to this request that President Trump had a talk with them about that. After that, they didn't reacted positively. I think that they wanted to put some pressure on especially the NATO members, to start supporting them and come to the Persian Gulf and take a part in controlling the Persian Gulf and Strait of Hormuz, as they are the main beneficiary of this part of the world. You know, what's going on there? The European, the American, they have only they have only 1%, less than 1% actually. Their oil is come through Strait of Hormuz. Japanese, almost 90%. Chinese, same, more than 60%. South Korea, 35%. Most of the Japanese Europeans, more than almost 40%, 30%, 40%, depending on the different countries. And their oil and gas comes from Strait of Hormuz, while the Americans, they have only 1%, and that can be even even it's not something necessary for them, but for the Europeans, it is very, very important, necessary. That's why what's happening there is somehow I can say it was a political decision by Americans and Israelis to put them under pressure to come and take a part after they denied to do that when the Trump asked them. So this is what happened. I don't believe that this is what happened. It doesn't mean that it's supposed to be a right. This is what I don't believe geopolitically and a political as a political view there. So that increased the tensions generally. But however, Mr. Trump last night draw the red line, saying that if Iranian continuing attack to the gas and oil facilities across the Persian Gulf and the countries around that, we will put more kind of the pressure on Iran, and we will attack back to the oil and the gas facilities. But if Iranian did not do that, we will not continue attacking to the oil and gas facilities in Iran. This is what happened last night, and that's now after that, the NATO members, they're coming together to see how they can take a part in controlling the Strait of Hormuz. This is the while Japanese Prime Minister Mr. Keiichi, also before going to US. They say that they are trying to put more pressure on Iran to control the Persian Gulf, to Strait of Hormuz especially. But at the same time, it's going to be a tough day for Mr. Keiichi, as actually, it was very good plan for her to go to the US and take their support also, especially against China. And also they were ready to, the Japanese are ready to partnering with the Americans to production the missiles that they lost in the war, the recent war, and also when they supported Ukraine, they gave it to the Ukrainian. So that's why the Japanese, they were ready to give us such a proposal that we are ready to take a part, come along with you to somehow we can say refill this inventories that was I can say was somehow that this list get got something close to the empty in the recent wars, and also they were trying to take a part in anti-missile program, the U.S. that the U.S. anti-missile program. I forget the exact name of this the program. They were ready to take a part in that and partnering with the Americans. That's what she was preparing to go with. But now we know that in the recent days, Mr. Trump also asked Japanese as well to take a part in controlling the Strait of Hormuz. And now Mr. Kishi doesn't know what to say, what how to affect, how to somehow react to this question. If Mr. Trump, especially in a press conference, which they have in a Oval Office before starting the private meetings, they are going to have some meeting, a short meeting in front of the reporters. What gonna happen there, and how she's going to react to this request if possible. But then we will see about that. What's gonna happen. That was on the geopolitical tensions. Looking at the economic changes, the main and the most important, we can say, the most important meeting that we had, it was, here we go. The most important meeting that we had, it was, here is it was the Federal Reserve meeting. Yeah, that's here. It was the Federal Reserve meeting, that the most important meeting that we had in past 24 hours. Again, we had a BOC and BCB central bank BCB meetings as well. But let's start with the Federal Reserve. The Federal Reserve, well, the market was expecting no change in the rate, so there is nothing happened, and the market didn't also the market got what it was expecting. However, the tensions was mostly about the press conference, and also about the dot plots. On the press conference, we didn't get any surprise answer. The most thing that I could understood from the Mr. Powell's press conference, that he is somehow unclear about what's going on and how these geopolitical tensions affect the markets. That's why he several times mentioned that it's still so early to talk about the possible effect of the recent war on the financial markets. So that's why for now, we're going to wait a little bit more and see what will happen. That's what happened that's what happened there in the reactions that Mr. Powell had to this war. But that was, I mean, instead of that, we didn't have something clearly saying that still the economy is fine, still the labor market is still strong. That's overall the things that we usually have. On the Dutch plot, the only big changes that we had, in two things we had changes. One, it was in the GDP expectations, and then in inflation expectations. As for GDP, Federal Reserve increased the GDP expectations, the growth expectations for 2026 from 2.3% to 2.4%, and for next year, for 2027, the GDP expected to increase by 2.3%, up from previous 2%. 2028, we're expecting to see 2.1% GDP growth in the United States. And for long term, the 1.8% GDP growth, which usually we're supposed to be happy to have in all past years, now is changing to 2%. That's what was the most important, we can say, the most important numbers that we had. Uh, and, and for I mean, that something that the Federal Reserve is trying to say is that the U.S. economy is still strong and getting even stronger in a long run compared with the 1.8% that usually we're supposed to see in previous years. If you want to go deeper, there is a middle numbers that the between what and what we had the numbers. You can check them as well as more for the professional traders. But anyhow, this was like overall number. I'm talking about the overall numbers. As for the inflation, unemployment rate, we didn't have a big changes. Unemployment rate for 2026, the unchanged expectation at 4.4%. For 2027, slightly got weaker from 4.2% to 4.3%. But for 2028 and for long run, we didn't have big changes. So the unemployment rate, we can say we didn't have a changes, but in the short take. But for inflation, PC price index and the core PC price index, both of them, the expectations increased to 2.7% from 2.4 and 2.5% that we were expecting, that we saw in dot plots in December. For 2027, that both of them increased to 2.2% from previous 2.1% in December meeting. And for 2028, from they didn't change that 2% for the long run as well. So that's, we can say, for the short term, 2027, 6 and 7, they changed inflation expectation by 0.1 and 0.2%. They made it higher, while for the long run, as for the net Fed rates also, they increased it from 3% to 3.1%, which means that the policymakers, they're expecting to see the long run interest rate from 3% to 3.25% in a long run for the Federal Reserve. That's what you're expecting to see. That's a little bit different with the previous expectations that we had about 3.85 to 4 point, from 2.85 to 3.10%, something like that. That's slightly east to the middle of the 3 to 3.25%, which means generally the market now expecting to see only one rate cut, only one rate cut at least for 2026, and probably one in 2027 for the long run, and no more. That's generally what's happening and what's happening in the Federal Reserve meeting. However, it was not the only meeting that we had. Uh, Last night we had the Brazilian Central Bank meeting as well, and we saw that the BCB also cut the rates, cut the rates by 25 basis point, while the market was expecting to see I mean, before the war start, the market expecting about 50 basis point rates cut, but the Brazilian Central Bank, or BCB, cut the rates by 25 basis point, as currently the inflation expectations increase, especially after increasing the recent energy prices. That's what's happening in the Brazilian Central Bank by the cutting only 25 basis points. Later today, we're gonna have the Swiss National Bank meeting as well, and for there, we are expecting to see the inflation, to see the interest rates unchanged at 0%, as because the current, the thing is that for now inflation is low. Inflation rate is low in the Swiss, in general in Switzerland, and 0.1% in February, 0.1% January. Generally, just about both in January and February we had 0.1%. Inflation on the monthly scale. Inflation generally is low. This is while the economic growth also is not so good. So that gives the central bank reason to cut the rates. But the negative rates is something not so pleasure. That's why the market expecting to see for now to holding the current rate and wait a little bit longer. If the, I mean, especially for the CHF rates, they want to see some changes. Most probably, they will choose to currency to change to make, the thing is that, how can I say, the lower inflation, while the lower inflation needs the lower rates, at the same time, Swiss National Bank, if they cut the rates, they will see the weaker franc and weaker the weaker CHF against most of its currencies, and that can put the CHF position in the risk, especially as for the safe haven. That's why probably they will go through intervene in the FX market then cut the rates for now to control the overall the situation, especially the CHF rate. That's what's most probably going to happen for short term. But if it continues, the situation continues for a long term, then maybe we can see the negative rates as well. But it's not something possible so much expected in the short term. Today, we're going to have the ECB, European Central Bank meeting as well, where we are expecting to see ECB to hold the rates at 2%. We now the current inflation recently, yes, especially yesterday, inflation for February increased to 1.9% from previous 1.7%. Inflation is under control, so they don't need to hike the rates. At the same time, we now the economic growth is weak, consumer spending is weak and the economies need the support. So while we were thinking about before the war started, we were thinking that the maybe European Central Bank can go for at least one rate cut to 2026 and give such a signal to the markets and such a hope to the markets and market participants, especially after the war and while especially in Europe energy price jumped much more than compared with the other economies. European energy prices is much higher right now, while they have a serious problem with the Russian. They have a lower receiving energy from Middle East. Now their energy prices, they're going to see the jump in their energy prices. That can increase the inflation in the European economies. That's why the European Central Bank doesn't see any room for now to change their policy. Most probably they're going to hold for now, but if the risk continues, if the geopolitical risk continues and the war continues for more than a month, most probably we can see one rate hike even in Europe. There's almost the same situation we can see in United Kingdom as well. Before the war starts, uh, we were waiting for 25 basis point rate cuts, but now especially why we were waiting for the 25 basis point rate cut, because in the previous meeting in February 5, we had a 4 votes for rate cut against 5 votes for holding the current rate. So that gave the signal that the more policymakers members, more MPC members, Monetary Policy Committee members, they are in favor of to cutting their rates. So that gives this hope. And also, we had a weaker economic growth, we had a slightly slower inflation, and all these signs, they give us such a hope that most probably we're going to go through rates cut. But after recent geopolitical tensions, now the risk of higher prices and higher, especially the energy prices, putting the more pressure, more tensions, bringing the more tensions in the market, more pressure in the market. That's why the market now doesn't expect any rate cut or change in the policies. That's what happened there. That's why we're expecting to see the holding the current rate. Almost the same situation we had in Brazil. That's why instead of cutting the 50 basis point, they cut the rates by 25 basis point. In next 24 hours, it's not just SNB, ECB, and BOE. We're gonna have the PBOC, People Bank of China's rates cut also tomorrow early morning before our daily updates. For there also, we're expecting to see that the PBOC also to hold the rates at 3% and 3.5% for the 1 and 5 years loan prime rates unchanged. We don't see we don't expect any changes in the prices. I mean, because the Chinese economy, we had some progress in the recent months. So the economic growth is somehow is fine. And recently, in the Chinese annual meeting, the meeting also they put the 4.5% to 5%, between the 4.5% till 5% of GDP growth for them. Now the stimulus, and at the same time, we had a positive growth in the retail sales. We had a slightly inflation increasing in the recent 2 months. Sounds like for this situation that we have right now, it sounds like a good situation. Economies got the situation and trying to move forward. Most probably, we're going to see the same same trend going forward, and don't see any changes in the policies, not for the rates, not for the banks. They already did their part to support the economy in recent months. However, there is a one still there is a one concern still continues, and that's the house price index, which again fell by 3.2% in February, and that can increase the concerns about the housing market. They have to think about the housing market a little bit deeper, and let's see what's going to happen there. For after all, yes, last night, and especially after the last night's meeting, in the market, if you want to say, Dow Jones lost about 1.6%, S&P 500 1.4%, and Nasdaq closed lower about 1.5%. We saw that the gold price also fell lower, especially after the rates increased. We know that the US 10 years bond yields increased to 4 point almost 28. Same trends we had in Germany, we had in Italy, Spain, and other economies. This is while the US dollar index also now trading much higher, about 100 marks, and all of them, they're putting the pressure on the gold price. This is why the oil price also, after last night increasing the tensions, increased. We know that the WTI trading above, slightly above $97, and the crude oil between 104 and $110, moving above and lower, but generally energy prices is higher. In the future market, after closing lower last night, is somehow a sideways with the lower tendency. Dow Jones moving sideways, S&P 500 losing about 1%, and Nasdaq, which is more depend on the currency on the rates, trading lower by more than 0.2%. The same situation we have in the Asian stock market. Asian stock markets is very low right now. Nikkei trading at 3.4% lower, Hang Seng almost 2%, Shanghai almost 1.6%. Same situation we have in the Kospi in South Korea by more than 3% lower. Singapore, India's markets also, they are all trading lower, and they are all effect of the geopolitical tensions and higher price of oil so far. This is what's happened in the cryptocurrency market. Don't forget, before moving forward, I say that in the cryptocurrency market also is the same. Bitcoin price slightly increased again above $70,000. What it was touching under $70,000 also recently. The risk is negative news for higher risk is a negative news for the cryptocurrencies, and as long as the market risk is increasing, we can see pressure on the cryptocurrency market as well. The VIX, after reaching towards to 22%, now we can see about 25%. Sorry, not percent, 22 March. We saw that the VIX are around 22 in the recent days, and now we can see again at above 25. That says that market risk is high, negative news for the risk asset, and supporting the risk haven gold, risk haven US dollar index. However, if the gold and silver as a risk haven, they are slightly lower because of, mostly as mentioned, higher rates and a stronger US dollar. But in the long run, both of them, they are still in a buy position. That was what's happening in the markets and what we're expecting to see. Hope it was useful for you. Talk to you tomorrow. Have a good day. Bye bye.